The government has just released the August employment report, and CBS News Business Analyst Jill Schlesinger has more. Jill, welcome. What were the results?
Well, remember that previous report, which was really nutty? There were tons of revisions to the previous two reports. This one was a little bit more muted. The economy produced 22,000 jobs in August. Now, that is lower than the 75,000 or so that were expected. And the two previous months were revised lower, but this time just by 21,000. But what we know is the job market's really slowing down, and most specifically over the last few months, that has really taken hold. We have 2025 job creation averaging 75,000 a month. The last 3 months, it's more like 10 or 11,000. The unemployment rate, it increased just by a tick, but to 4.3%. That's the highest rate in 4 years. Average annual wages up by 3.7%.
All right, Jill, so you're talking about the job growth that's slowing down over the last few months. What is expected for the rest of the year?
Well, businesses are dealing with uncertainty. They're looking at higher costs, still elevated interest rates, and I think that's really kept their hiring plans at bay. Now, I think the good news is we have not seen widespread layoffs across lots of different industries. But the bad news is that the average time unemployed has increased, and the number of folks who've been out of work for more than 6 months, that has slowly started to climb. And that does tend to happen when the economy is softening. So I don't think we're going to see massive layoffs just yet, but I do think we know the labor market is weakening.
Now, the Fed meets in a week and a half. With this report, what's expected?
I think this bakes in a September quarter point rate cut. Like, there is no doubt in my mind that that's likely to happen. Chair Powell will probably tell us, like, listen, we're watching price pressures that could be building. But I really think the Fed is likely to look at these labor market conditions deteriorating and not just cut in September. They may even cut again at the remaining 2 meetings of the year. That would be in October and December. So I think that regardless of what happens to the composition of the Fed, this current Fed is likely to cut rates maybe by as much as 3/4 of 1 percentage point before the end of the year.
All right, Jill, thank you so much. And you can see Jill regularly on CBS Mornings and the CBS